Futures trading for beginners. This is a futures trading 101. We're going to break down what futures are, how they work, so you can get one step closer to becoming a full-time trader. What are futures and what is futures trading? Just like any other product that we trade, stocks, forex, or even options. You're buying low and selling high, or selling high and then buying back low to profit. But there is another use for futures, and that's the way companies have been using them for hundreds of years. And it's agreement to buy or sell a specific commodity or asset at a set future price at a set future date. Futures trading was originally for companies to lock in the price of a commodity such as oil, gas, sugar, and other needed materials for their businesses. Let's say a company wanted to lock in the price of oil for their business. They could buy a futures contract and pay 79 for the next 3 months by buying a futures contract, thus locking in the price of the oil. They can do their books and plan. And in buying that futures contract, you're agreeing to pay $79.30 per barrel for the next 3 months by buying the contract. So when the futures contract expires, because you already paid up front for it, you then are going to have the oil delivered to you at the original cost you bought. Even though the price could have gone up, companies will also use it to hedge. Something to understand about futures contracts is that they do expire every 3 months. Every quarter, a new futures contract will be available, and that's what they refer to as rollover. And that's why companies are using this, because they can lock in for 3 months its price, or even a year out or 2 years out. Let's look at the example ES, which is the S&P 500 contract. It switched to the current contract that it is now on in June. And then when does it switch to the next contract? In September. Futures contracts have a value attached to them based on tick value. I think this is somewhat confusing, but if you look at the way I'm going to show you, it becomes very simple and easy to understand. All right, we're going to be going over the S&P 500 E-mini and the NASDAQ, which is NQ, because I think those are probably the products that are the best to trade. It's what I trade. I think they're the best trading products in the world. Better than any Forex, better than any stocks, better than any options. They are the ultimate trading product. The S&P 500 E-mini is $12.50 per tick. But what is a tick? A tick is a quarter of a dollar. Each futures contract is going to have their own tick size and their own point size, and it will also have a different value attached to it. E-mini is $12.50 per tick, and one tick is 0.25 of a dollar movement. So it's a quarter, right? Think about a tick as a quarter. The NASDAQ, on the other hand, is only $5 per tick, and one tick is 0.25 as well of a dollar movement. Now, let's look at this. The S&P 500 E-mini, if a tick is $12 and there's 4 ticks in a dollar, right? Because a dollar is just a quarter, there's 4 quarters in a dollar. That is equaling $50. Because 12.50 times 4 equals 50. If ES goes from 4,325 to 4,326, the balance in your account would have went up $50. And then the NASDAQ E-mini is $5 per tick, but there's 4 ticks in a point value equals $20. How much does a contract cost? This is somewhere where traders, I don't think, understand quite fully, and they're trading way over leveraged. Futures trading is highly leveraged. If a dollar movement of the E-mini S&P 500 is $50 and the current price is at 4,345, you times 4,345 times 50, and that is going to give you the notional value of a futures contract, which is $217,000. And then NQs right now is around 300,000. So if you're trading an evaluation with, let's say, a 50K account, and you're trading 4 ES contracts, you're trading with almost $1 million worth of leverage, which is insane, right? Because you only have $2,500 of drawdown. Here we are on Tradeovate's website, which Tradeovate is a futures broker. I think they're the best one for new traders. We're going to look at their margins and what's required and how to get started with just opening a micros account, which a micro is going to be 10 times smaller than the full-time or the full-size contract, allowing you to start building a small account. They have just about every product you can think of, from Bitcoin to indices, Coinbase futures, oil, crude oil, natural gas, wheat, corn, pretty much every single commodity on earth is going to be tradable in futures. FX, Forex, it's all there. Let's look at the margin requirements for the E-Mint. Yes, the futures exchange shuts down every day between 5 p.m. Eastern and 6 p.m. Eastern. The futures market is closed, but then opens back up. And the only day it's not open is Saturday. Let's go to the micros though. Okay, this is MES, which is the micro E-mini S&P 500. Instead of it being $50 per point per dollar movement, it is only going to be $5. It's 10 times smaller. Same thing with the micro NASDAQ. For this to start trading it, you need to have a minimum of $50 in your account. So you can see how you can grow a small account. I recommend at least starting with 100, allowing you a little bit of movement, and you can easily double this every day and compound the gains. Same with the micro NASDAQ. It's dollars per point move, but it moves 3 to 4 times more than the S&P 500. You would need at least $100, but then you're going to need to double that so you have some movement to start. You can easily start a micros account with Tradeovate and get used to it and then start building it up. I have one. I've had one for a long time. They're fun to trade, not much risk. You can move in and out of the market. It's very liquid. And if you have a job, you can trade this during the evening. Here we are on TradingView, which I think is a good platform for trading futures. You can connect Tradeovate to it. Okay, let's say you want to demo trade and get a understanding for futures. How are you going to do that? First, you need to purchase the data because futures works a little bit differently. You need data to access the chart information. Because you're a non-professional, it is quite cheap. With TradingView, it's only going to cost you less than $5 a month for CME data. Once you purchase that, it's pretty easy to find on TradingView. You can set up your paper trading account and then just paper trade it, get used to it, get an understanding for how the point system works and all that. And then here's NQ. The good thing about futures is you can go short whenever you want. You don't need to borrow stock or anything like that. It's not complicated like stocks. Let's say I wanted to go short here and I put my stop there. Okay, now it's going my way. This is a 1-minute chart. It's already up $100 in only a few seconds. That's why futures traders make such good money and they seem really successful. It's because it's easier to trade. It's easier to get profits. It's also easier to get more losses, but as long as you know how to trade, it can be very lucrative. By far more lucrative than any other stocks or anything. You need so much capital to trade stocks that it's insane. Hopefully you guys understand how the contracts work now. Just to check, if you're a Forex trader, look at it as a lot. If you are a stock trader, look at it as a one share. Let's spread this out. See, it says 4495.75, 4496.00. From here to here, that is 1 tick. And 4 ticks, 1, 2, 3, 4. That is a point, which from here to here, that is $50 in price movement. You can scale in and out, and with the margin prices so high, how are you going to trade it without having, let's say 10 grand in an account? There is a way using funding companies, trader funding companies, which I'll introduce you to help you get that capital and margin you need to be able to start trading. I actually have a website that is dedicated to reviewing these companies. They have changed my life. Without funding companies, I think I'd still be working. Definitely have changed my life. Let's look at Bulenox, for example, because they're a company I really believe in and definitely have made a lot of money with. You can purchase an evaluation, which is going to be a test. No one's going to give you a whole bunch of leverage and capital without making sure you can trade. There's a simple rule set. There's only really one rule. As you can see here, in July, I got paid out over 8 grand from them. So they are legit, guys. A lot of people say it's just too good to be true, but this is not the case. And if you come to my website, I have discounts on here that you're not going to find anywhere else. With Bulenox, they are going to give you an evaluation. Trade some evaluations with certain companies are extremely expensive. They can range from $100 to $1,000 or more. But with Bulenox, I have a deal worked out with them where they give me discounts for my following. You're only going to be paying about $18 for a $50,000 account evaluation. Then once you pass, you will set up and activate the funded account and trade that. And then you start getting payouts. You can find out more about that in the video in the right-hand corner. The fact is, futures trading is awesome, but without the leverage, you're going to be struggling. I just want you guys to see that they are real and that you can do this and you can make money with them. Here is a payout from Apex Trader Funding in June, $16,267. And then Bulenox that same month was $8,123. That is $24,000 in one single month using these funding companies. I'll put the link to my website in the description. Check it out. And anything you want to know about these companies is either on my website or is on my YouTube.